Alright, let's dive into something that's been buzzing in the streaming world lately. FuboTV just dropped their third quarter results, and honestly, there's a lot to unpack here. But let's start with the hook, the World Cup. You know, that global phenomenon that has everyone glued to their screens. FuboTV streamed it, and guess what? It seems like that move paid off big time. But here's the thing, it's not just about the World Cup. There's a bigger story here about streaming wars, mergers, and the future of live TV. So, let's break it down. First off, FuboTV hit 5.75 million subscribers this quarter. Now, that might not sound like a massive jump from 5.63 million last year, but context matters. In a market where streaming platforms are fighting tooth and nail for every subscriber, any growth is noteworthy. Personally, I think what's really interesting here is the timing. This growth comes right after their merger with Disney's Hulu Plus Live TV. Mergers are risky, they can either supercharge growth or create a messy, disjointed user experience. So far, it looks like FuboTV is leaning toward the former. But here's the kicker, their pro forma revenue hit $1.48 billion, which is a huge leap from $1.07 billion last year. That's impressive, but it also raises a deeper question. How much of this is sustainable? Now, let's talk about the World Cup effect. Streaming a global event like that is a high-stakes gamble. It's expensive, and there's no guarantee it'll pay off. But FuboTV managed to trim their net loss to $25.7 million, down from $38 million last year. That's a win, right? Well, not entirely. On a pro forma basis, their net loss actually rose to $72 million. What this really suggests is that while the World Cup brought in revenue, it also came with significant costs. This raises a broader perspective. In the streaming wars, is it better to chase short-term gains or focus on long-term profitability? I'm not entirely sure, but it's a question every streaming exec should be asking. One thing that immediately stands out is CEO Elisa Bowen's strategy. She's talking about refining packaging options, broadening distribution, and investing in user experience. That's all well and good, but what many people don't realize is how challenging it is to execute on these fronts. For example, refining packaging options sounds simple, but it requires a deep understanding of what subscribers actually want. And broadening distribution? That's a logistical nightmare. Personally, I think Bowen's focus on flexibility and choice is spot on. In a market where consumers are spoiled for choice, giving them more control could be a game changer. But here's where it gets really interesting. FuboTV's adjusted EBITDA was $19.1 million, down from $31 million last year. Now, EBITDA isn't the be-all and end-all, but it's a key metric for operational efficiency. This dip could be a red flag, or it could just be a temporary blip due to the merger and World Cup costs. If you take a step back and think about it, this is a classic case of short-term pain for potential long-term gain. The question is, will it pay off? What makes this really interesting is how FuboTV is positioning itself in the streaming landscape. They're not just another Netflix or Disney Plus. They're focusing on live TV, particularly sports. And let's be honest, sports is a massive draw. But it's also a crowded field. With competitors like YouTube TV and Sling TV, FuboTV needs to offer something unique. From my perspective, their focus on innovative user experiences and flexible programming packages could be their secret weapon. But it's not just about features, it's about execution. Can they deliver on these promises while keeping costs in check? A detail I find fascinating is Bowen's background. She left Disney Plus to take the helm at FuboTV. That's a bold move, especially considering Disney Plus' success. But it also shows her confidence in FuboTV's potential. Personally, I think this could be a turning point for the company. With her experience in streaming and content strategy, she's well positioned to steer FuboTV toward growth. But it's also a high-risk, high-reward situation. If she succeeds, she'll be a hero. If not, well, let's just say the streaming world can be unforgiving. So, what's the takeaway here? FuboTV's third quarter results are a mixed bag. They've shown growth, but it's not without challenges. The World Cup was a smart move, but it's just one piece of the puzzle. In my opinion, their success will hinge on how well they can execute Bowen's vision. Can they refine their offerings, expand their reach, and innovate fast enough to stay ahead? Only time will tell. But one thing's for sure, the streaming wars are far from over, and FuboTV is a player to watch. What do you think? Is FuboTV on the right track, or are they biting off more than they can chew? Let me know in the comments below.